Good morning, everybody. So today we're going to be covering the one bar rule. Let's see if we can pull up some things here. So today on BABA, we closed it out relatively quickly right at the bell. So let's look at BABA and see why. This is on the small account challenge, so we really don't have a choice. This morning, some news came out. Actually, there was some good news. Let's exit out of there. So this news came out this morning that the company, the board of directors, were doing a repurchase program of $6 billion to $10 billion, which would have caused the stock to jump relatively quickly. But then you had all this other news come out, just a bunch of garbage news, negative stuff. What do we got here? Alabita shares plunge 8% amid pressure from the Chinese government. What was the other one? And then this one, Alabita's troubles are far from over. Again, 90% of the news is just garbage, but that's enough news to scare investors away. So with the one bar rule, right at the open, we had the green bar. The next one was red. We sold. We got out. It continued to go down, but then we did have another green bar. With this account, unfortunately, we cannot do more than 3 trades a week. We don't have a day trade on the 1,000 account challenge until tomorrow. So anyway, this is a good example of the one bar rule. First bar to go cross above the 20 and above the VWAP. When do you get out? After you purchase that bar. What does the one bar rule consist of? Well, the one bar rule consists of if you bought in here and the next bar was red and you went below the bar you initially bought, you would get out. Okay, so let me show you how this would go. Let me get rid of that for a minute. Alright, hang on one second. Gotta get rid of all the noise. Alright, so if you bought in on this bar, you're good. You have a red bar here, you're still good. Why? Because you're not below this bar yet. The one bar rule is you do not want to lose more than your initial investment. Okay? So, to give you an example of what I mean, had you bought in on this bar, I'm going to pause for a minute because I'm going to ask you guys, should you buy in on this bar? Had you heard about BABA and the position moving up, and you got in and you saw all these green bars, would you buy in here? Yes or no? You can answer in the comments below, but your answer is no. And why is that? Because look how far away from the 20 you are. You are way too far away from the 20. And what have I been telling you since day one? When you get in to a position, you want to get in at or near the 20. Because what happens? The stock always goes away from the 20, and then what? Back to the 20. So even though this bar, you wouldn't have lost everything depending on where you got in on this bar, but here you would have. So this would have been your get out. Never lose more than one bar. Okay, so if you bought in here, you could have rode this up 3 red bars in a row getting towards the 20. Yeah, I would have been out of that position right around there. Why? Because there's no news on this stock. I mean, it was just terrible news anyway, so I wouldn't have even entered here. I would have stayed away from BABA the entire day. But again, the one bar rule. First bar to break the 20. First bar to break the 20. Get out. Never lose more than one bar. You would still have a little bit of a gain here. What is the number? What is the rule? Don't buy away from the 20, because it always comes back to the 20. When you enter a position, long or short, you're going to buy the first bar to break the 20. If you're entering short, you're going to buy the first bar to break below the 20 to go short. To go long, you want to buy at the 20, not away from the 20. The one bar rule is if you don't listen to the rules and you buy in here, you're out right here. Never lose more than one bar. The one bar rule only applies to day trading. It doesn't apply to long-term investing. So let's look at Riot. Today Riot had a good day. Okay, so I'm going to zone in here. Here is your first bar to break the 20 and the VWAP, okay? Do you get out here? No. Why? Because it didn't break below your entry point. So you could ride this up, up, up. Here's your bars coming down to the 20. Now this is a massive red bar. I'm going to teach you another little trick right here. This is a massive red bar. When the very next bar does not go above 50% of this red engulfing candle, 9 times out of 10, the stock is going to drop. We call this the bounce. The bounce has to be 50%, 51% or higher of the bar, the previous red candle. But that's another video. Okay, so anyhow, let me zoom out here. Let me get back out. Go back in, and we'll talk about the never lose more than one red bar. Okay, so again, why didn't you get out on this red bar? Because you haven't lost your initial profit yet, right? And it's coming back to the 20. Now it's going away from the 20. What is happening here? It's coming back to the 20 with a vengeance, with a massive red bar. That's your first sign. So had you bought in on this bar, where would you sell? This bar? No, because it hasn't knocked you out of your profit yet. You would have sold on this bar. You would never buy in right here anyway, even though this is your first green bar. The reason being is because of this massive red bar and the bounce not being 51% above it. So again, if you were going short, this would have been a great time to short because you're a first red bar to cross the 20. So the one red bar rule is never lose more than one bar. That means if you bought in here, which you should never do, why? Because you're away from the 20, you would get out here. Why? Because it broke your initial investment. Okay? So typically what I would do on day trading stocks in the morning is if I got in here with 1,000, 5,000, 10,000 shares, I would be out here. 100% out, completely out. Now my next move, I would take my profit, only my profit, not my initial investment. And then I would wait for another entry. Right here, first bar to cross the VWAP. Beautiful entry. Could have rode this all the way up until your first bar crossed the 20. Either one of these bars, then you're out again. Now you have another 100% profit. Now what do? You cash out. You wait for another entry. There was no other entry on Riot. It's all a downtrend from there on out. So hopefully you understand the one bar rule, okay? You never want to buy away from the 20. You want your entries to be on or at the 20 or on or at the VWAP, okay? The one bar rule is right here. If you got in here, your next bar was red, you're out. Why are you going to risk it? No point in risking it. You should have never bought in here anyway because you're away from the 20, okay? You wouldn't buy in here at the 20 because you have nothing but red. You got 4 red bars in a row. And then this bar broke it. Never want to buy in there. Alright guys, so that's the one bar rule in a nutshell. If you have any questions or you don't understand, just let me know. Okay? Thanks guys.
Like a Hellcat.